The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman here, and I want to thank all the hosts starting at 8 o'clock. Got John Logan, and then we got Larry Pesavento. Larry had a guest today, and Tom O'Brien, just fabulous hosts, and we had a lot of information. So it's my pleasure to be here on the 19th of August, and we're looking at a Dow that's down 181 at 17,330. S&P is down 20 at 2,076. Comp index is down 47, 5,011. Gold is up 10, 1127. This is the first time that I'm seeing over the last week or two some kind of strength, certainly in the gold stocks. In my opening call newsletter, we have, in fact, have taken a position on the long side in gold. This is one of the first times in quite a while, and this should be a reflection of a currency of fear, because this market is becoming hazardous to your health and your wealth if you aren't directing your portfolio very judiciously to the right areas. Couple of things we need to look at here. Silver is up 38 cents at $15. So gold is at 11.27. Silver's at 15.17. Platinum's up, but high-grade copper, and this is going to be very important. You know, we've not dismissed this at all as a harbinger of larger trends, economic trends around the world. Look at this copper going down, 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 down. And if you're looking at the weekly chart, you have broken to a new low, but actually it's the monthly chart. Remember that long-term trend line? Look at this. This is high-grade copper continuous contract. The channel, the little inside wedge, the inside track support level that was parallel to the highs that were made back in 2006, 2008, and then again in 2011. This up channel has been sacred. In fact, it's held beautifully. It held when it came back down in 2008 in December to a 1.54. Ran all the way back up. This is a continuous contract, so the prices are a little bit different to what you would normally see. 4.779, February of 2011. Then it made a very steady lower lows, lower highs, lower lows, kept going until I said that that H pattern, which goes to a lowercase m pattern, should break. And if it breaks the 200-period moving average, would be my target in the 260s. If that breaks, you've got this support. I'm going to increase it so that you can really see it. I want you to see it clearly. We are sitting with another week to go. A week and a half. Let me just double check here. Today's the 19th. We've got 1, 2, 3, 4, 5, 6, 7, and then the 31st. 8 trading days. That's all there's left in high-grade copper to try to save itself from not closing on a monthly basis below this key trend line. It's right there right now at 2.27. Goes to 2.25. Not good at all. And in fact, it's telling us about world economies starting to suffer. That's the way I'm reading it. At least I have no choice. High-grade copper, 120-minute chart, has the left side low of 2.265. Better hold that and try to run in a rectangle formation, breaking to the upside, not the downside. All right, let's get on with our story. So that's high-grade copper. Let's look at the dollar next, because this is very important. We've got the Fed coming out later on, so we will have to look at the yields. Dollar's holding well, just a tad above 90 at 96.99, just fractionally above the 9-period exponential moving average in the daily. In the weekly, it's at 96.75. That's your weekly 9-period exponential moving average. Monthly is 94.59. Most importantly, look at this 120-minute chart. It went to an E, and now there's either an F/B, because that would become D, brand new A, and a brand new B. I wanted to be as conservative as possible rather than call this A. And that says that if the dollar this afternoon holds well and doesn't crater because of the Fed speak, and you do not get this H pattern, let me just draw it in right now, you don't get this kind of pattern with an immediate pullback under 96.40s, but instead it manages to go to 97s. That it's at 97 right now, 97.20s. No, I'd like it a little higher, 97.30 or higher. This is going to be a very important Fed meeting because this is the opportunity that they can use to bump the Fed rate. Now, I suspect that the Fed is going to do the wrong thing at the wrong time. It's really difficult to do the right thing at the right time. Why? Because there is so much data that they're looking at. There is so much nervousness. There is so much fear of making a mistake, especially with the stock market right now. Under tremendous pressure. We're down from the 18,351 high in the Dow to today's 17,336. We're 1,000 points down. Not a big deal in the spectrum of things. It's what you can expect. But I think that the Fed is going to be looking at the data that I look at. And they're going to say, wait a minute, hotels, Hyatt, way off the high, all-time high in the 64s, now in the 52s. Marriott, one of the finest of all, they rent out all the buildings, but Marriott International Hotels, Resorts, makes a high at about 85, just under 85. It's trading at 71 under the 9-period moving average in the monthly chart for the third month in a row. This is not good economic news. 85 round number high. I forgot all about that, of course. You've got Hilton, HLT. And that comes underneath the 3160 high that was made back in April of this year, and it's trading at 25 with a lousy daily, lousy weekly chart. I think this is a serious period. This is a period for the first time, and I don't know how long. I've been talking about it for the whole year. I've been saying that there is a rotational correction going on. As the market has gone sideways, we've seen certain sectors like the cyclicals, like GE, like my Dow Quartet, GE, oh, what a horrible chart. IBM, UG, Triple M, UTX, not quite as bad as the others, but a horrible monthly chart and horrible weekly chart. This is telling us something. Please don't ignore it. If you have funds, if you are invested, if you are still 85 to more or percentage more invested in the stock market on the long side via mutual funds, do whatever it is. Certainly it wouldn't be from a portfolio that we have in my opening call, because we are still on the short side. We just missed by 1 penny getting the VIX long this morning. What a pity that was. 1 penny. But yeah, we're looking. Yes, we do have a potential long position that we'll get if there's a pullback in this particular area. But this is a stock that is in an area that says it is always late to the party, and it should rally just a little bit before it starts to crater. And that's what we're trying to play. If we don't get it today, I might just say skip it. We don't need any longs in this particular in this situation. Now, we do have longs, but they are ETFs or ETNs that are shorts. So in other words, the fund itself makes itself up entirely short, and we buy it as a long position. So that if you want to get it in your IRA or whatever, if you have some kind of a portfolio that doesn't allow you to short, or in this case, for subscribers, I had them practice from about April of this year, March, April, to start shorting, learning how to short. So we've had one particular position that we keep going in. We just missed it this morning. We'll get back in. That says you can be short the stock market by buying this on the long side because it's made up of shorts, 100% short the Dow. It's just a nice vehicle. Not only that, we've had practice. They've made some money and lost just a tiny little bit, but they've got subscribers who've never gone short before, have now gotten used to saying, wait a minute, I want to be more control of my money. I want to be able to protect my portfolio. I sometimes don't like making changes. So that means I want some kind of protection, and that's a nice way to do it. And it's not a safe way, but it's the safest way that I can think of, and the least expensive way that I can think of. And when it works, it's beautiful, because what it's saying is, hey, I am at this particular point in control of my funds to a certain extent. Whereas before, you're just sitting there helplessly saying, I knew I should have sold, I knew I should have sold. And this way you don't have to sell, you can actually protect yourself. My suggestion is take a little bit off. If you're if you're a little worried, take a little bit off. You don't have to take the whole thing off. Just take something off. Protect yourself, because this is not a good-looking market. I don't care if there's a sudden reversal like the other day, last Wednesday, where we reversed 350 points down to 350 points back up to change unchanged exactly. It doesn't bother me in the least. I just want you to feel that you have some control of and that's what we do in my opening call. So here we go. So look at that. Now all of a sudden you've got other sectors like advanced auto parts. That whole sector, because 70 million cars have been sold, that's telling me that we're going to start seeing a slowdown. This is the last sector to turn around. We'll see if it does turn around. And that is the auto parts area. So we're going to be watching this closely. AZO is the big one. It's down only 2.6. AAP, which is advanced auto parts, was up a little bit. Not a big deal. This is going to be something to watch, and it's just nice to start nibbling at shorts to get a feel for it, because all you're doing is you're having very tight stops, and eventually you're going to get it right because you've got a feel for the way that particular sector or stock is starting to fail at all-time highs, and it just doesn't have the strength to move higher. Then it starts to, the wheel spin kicks in and it starts to move to the downside. We've seen that in a number of areas. Remember the XLV we were talking about. XLV is down 69 cents to 75.34. No big deal, but it's starting to show that there are signs in this fantastic rally in the monthly chart, that there are signs that at some point fairly soon, over the next few weeks, it could test the 72.60 9-period exponential moving average in the monthly chart. It hasn't touched that since October, last October. It hasn't closed below it since it, listen to this, and since it broke out in October of 2011, this XLV has not closed once underneath the 9-period exponential moving average in the monthly chart. That is amazing. All right, so let's see what the IBB is doing. IBB, down 5 at 363. IBB takes out 357. It's a done deal that this channel in the weekly chart is going to be the pattern that we need to follow very closely as it starts to target 345, the 9-period moving average in the monthly chart. Now, some of these positions we are short, so maybe I'm talking my book here, but that's not the issue. The issue is be careful. That's all. TLT, we didn't do that. Now we can do it. The TLT is up 73 cents at 124.26. This is the Lehman 20-year T-bond fund, and making that U-shaped pattern in the monthly chart to 138.50, pulling back pretty sharply. I'm going to get rid of these Fibonacci extensions, just take it out. I like clean charts. I'm going to show you that this cup formation right here, we're going to be watching to see if the base is not broken. If the Fed does something and the bonds become fearful, 114.88, the low of 3 months ago, that'll just disappear in a moment. I don't think so. I think the Chapmanization of our bond.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So this is what we're looking at. The TLT was in a beautiful up channel in the 120-minute chart. Just made an H pattern, tries to break out of the H pattern by retesting the low, and the same bar becomes the bar that breaks to the upside. This is going to be very important. As I say, I think that we're still going to be in the Japanization of bond yields category, but you never know. What if the Fed says we're going to raise, and then the market itself says you can raise, but the yields are coming down? That'd be very interesting, wouldn't it? Just as the rates have gone up at certain points and the Fed never said a word. It's going to be very interesting. But I would suggest to you that this is about the time that they need to do it, because if you start to stall, it starts to look political. And most of the time, I don't think Yellen actually cares about that, but most of the time, the Fed governors do not want to look like it's a political instrument that they're using. We'll see. Most importantly, just give you parameters. It's not a sudden spike. It's where it holds. If the TLT closes this afternoon, after the Fed speak, and it closes it's at 124.29. If it pushes over 124.90, especially if it pushes over 125.10, not only will that be really positive and at least for me confirm that, yep, the Fed is stuck, and that yields are going to keep coming down because they're really afraid of the economy stalling. But if there is a sudden spike to the downside, and instead of being at 124.10 or 123.70, it's really a 1 or even a 2-point slump, and you start to see 122s, That's going to be something different. And let me just show you this here, the TYX.X. This is the 30-year yield. 30-year yield is kind of stuck. It's gone to a B in the daily, but the weekly chart is suggesting from the stochastic and the MACD that it wants to go lower. It might bounce a little bit, but it does look like it wants to go lower. And the monthly chart has a pattern that looks like it's trying to form an H, and that is the TYX. Tyrannosaurus, yeah. So this is going to be very interesting. Now, I wanted to show you something. Marshall and the Gent just mentioned that, and he said, what did he say? He said, Basil, here's the tallest structure, the space elevator, 12.5 miles high. Check it out on Google. 12.5 miles. Yes, I will look at SLV in a moment, but look at this. Talk about the world's tallest building. This is a Canadian company gets patent for 20-kilometer, it's 12.5 miles, high space elevator. Look at that. The Canadian press. The final part of a 20K tall space elevator platform recently patented by Thoth Technology. If ever there was the right name for something in space, the Thoth Technology of Pembroke, Ontario, is shown in this artist concept, the Canadian press. That is unbelievable, and it's so clever. Look what it does, because they want you to be able to blast off into space, not from going through the atmosphere, but in fact going above and just moving on to your destination instead of saving. What do you save? From the top of the structure, you'd be able to launch using a single-stage space plane directly into low Earth orbit, and the return to the top of the structure, you wouldn't need any expendable rockets that would come off during the flight. Inventor Dr. Brendan Quinn said from the Algonquin Radio Observatory in Pembroke, Ontario, the whole thing would be like a passenger jet. Quinn said the structure would be pneumatically pressurized and guided over his base to allow it to stand freely. The center of the patent is how to control such a huge and slender structure. We basically null out the external forces on the tower using pneumatic pressure and actually lean the tower, actively guide the center of gravity toward things like hurricanes so that the tower won't fall down. He said the company intends to use pneumatic cells composed of materials like polyethylene and Kevlar and leverage the power of gas pressure to create a strong, rigid structure capable of holding the immense mass. That is, saving 30% of fuel for the conventional rocket. That is extraordinary. It is really an amazing thing. So let's go on with our market overview. So bonds are going to be obviously quite important. Now, this is going to be very interesting because the reason why I liked the action in gold, see, gold is in a leg C up in the daily. Very nice leg up. It wasn't such a nice leg up, but today's action is very good, hitting the 9-period exponential moving average and actually extending leg A from last week into this week. And it's only leg C up in the 120-minute chart. Maybe before I say that, yep, leg C up. And I like this action. And it tells me that the Fed is maybe going to do something or going to say something. So that would help. That's helping gold. And if that's the case, then we've got to look at the dollar a little differently and say, what's the vulnerability of the dollar? Well, I just drew it in. It's the arch formation. And the euro, USD. I'll be right back. We've got a break coming up. And euro did make a PT, but the MACD is still strong. I'll be back. We'll talk about that in a minute.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman. So there are a couple of things going on. IWM is going into the wick of that candle of last Wednesday. If it hangs around you just a little longer, then somehow or other over the next, between the end of the day and tomorrow, it should test 117.97. That's $1 lower than where it is right now at 118.94. The weekly chart is still very, very poor. 120-minute chart at two patterns. It went right to the dash pink line at peak C and then failed, made an arch formation, and that again is suggesting that you can retest the lows. The New York Stock Exchange, NYA.X, New York Stock Exchange, horrible weekly chart. I talked about this, spoken about this for some time. I have no way, out of all the charts that we've got, the one that I just cannot get, A, B, C. No matter how I counted. No, wait a minute. A, B, C, D. Oh, okay. That's going to be that's going to be the instant restart. 1, 2, 3. Yes, it is an instant restart. And I'd circled it and I said, we're going to just hold off because we want to see if there's going to be a close under the 9-period moving average. So let me just do this right now. I'll do this in pink. And I'll make it nice and big. Actually, what color should I do it in? Format. So, oops, I don't want to do that. I want to just do the cancel. Cancel. I just want to do that particular A there. And I want to get what color do we have? I want a color that's going to be bright. Oh, we'll make it pink. make it pink, and I'll make a font nice and big. Let's make it an 18 font. No, let's make it a 16 font. There we go. So that's A, and then I'm going to make that permanent for just now. So we go set as default, color set as default. Now look at this. So that's A. Let me open this up a little bit so you can see what I'm doing. Oops, it disappeared. So the A is right here. If that's an instant restart, that would be A. Where there's an E, at 11,108. At 11,105. At 11th, that was in July of last year. In September of last year, it was 11,108, and that becomes B. And I discussed this, and I said, yep, it's an absolute possibility, but I'm just going to give it a little bit of room into August, and now we've got the room. So then this becomes a C, just barely higher. You got 1105, so 11,105, 11,108, 11,142 gives you a C right there. And now we've got the D at 11,000, what's it, 11,150 something? 250 something. 11,254 in May. So there it is. So all the little ducks have lined up. I can feel quite satisfied that we've done our homework. That's really what I'm looking at. In fact, I'm taking all this away. I'm taking that away. It's done. I'm not satisfied at all. I'm moving the down arrow to here because with a week to go, taking a chance. I'll take a chance. So that's A. That's B. Got it. A, B, all of that's out. All of that's out. Out. Out, out. Damn spot. There it is. Gone. Gone. And I finally have all the little ducks lined up. A, B, C, there's your D with a down arrow because the technicals are horrible. The stochastic and the MACD, just terrible. The 9-period moving average closed under 1, 2, and if we can't have a spectacular rally to 10,829 this week into Monday, this is going to be a confirmation that that down arrow is correct. I'll change it if not. So this is the notation. Finally, I've got it. I'm convinced that that is the correct notation. New York Stock Exchange has a peak D. That's it. Okay, I can put these guys a little bit better there. Put it over there, 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 and there. Done deal. Okay. Now, of course, the market would always surprise me. It could turn around and rally, but I don't think so. I think that this is the one I'm convinced is the one that I'm going to stay with, and we've got the up channel right there, that inside track right there, and it says at some point over the coming months we should head towards the 10,400 to 10,300. All right, that's it. So that was one of the last little ducks that need to be sitting in order, and I think we've got it. Wow, that was a lot of work. Now I've got a little time, so I'm going to go through some things that I wanted to look at. When you are looking at something, let's take a Facebook. Facebook had a nice spike yesterday, holding quite nicely today, only down 57 cents at 94.61. Gosh, look at that volume just running in and out. People are just buying it and selling it. It's moving up. It's moving from a 0.57 to a 0.55 as we're speaking. It's just the stock don't often move that quickly. Look at that. In the last minute, we've seen at least a dozen. No, it must be much more different price movements, even at 60 at this point, down 60. So when you have something like that occurring, my suspicion, and I said that before, that I think there's limited upside in Facebook, even though it's a fantastic stock. I mean, the way it's acted is a fantastic stock. I'm not talking about the fundies. But most importantly, it is suggesting very strongly that if the Roman candle of last week is hit, and Facebook in the next 2 weeks starts to trade at 93.20 for more than 4 to 6 hours, like almost a day, then you're looking at the wick being tested, that 91.99, 9-period moving average in the weekly chart, the low of 91.19. That's game. That's in play. So you got to be watching this real closely. And I am suggesting that even if this is gray B, and meaning it's a a rally, but it's not yet a buy signal to a buy mode. Oh, still got that other notation. Let me just change that. That should be blue. So blue, we'll set as default. And font is 12, and set that as a default. And there we are. So that's what we're looking at here. And this is what we call gray, and I'll change it now to gray, look there, meaning that it is way underneath the previous high, and it's a retracement failure mode. Doesn't mean to say you can't go to a buy signal from a buy signal if the stochastic continues running and the MACD then crosses positive to a buy mode, but it hasn't yet. And I'm suggesting that there are a series of cup and arch formations that are just testing the sine wave pattern that we're looking at. That's all that's happening here. All right, that's Facebook. What about, let's take a stock like Ambarella, AMBA, stock that I was really hoping to get a buy signal in, and yet it's not. Ambarella was just unbelievably good. Was this the one that had a relationship with GoPro? They were suppliers of something or other. I'm not sure. But anyway, the way it's looking here is, oh, it looks the same as GoPro right now. So you see, the stocks that have been the most popular right now, nothing. There's nothing going on. So I want you to just say, you've got to be real careful. What about cyber? Another one that I was really hoping to have a little bit of a buy signal, maybe an 8% pop. Look at this. It's just struggling here. 59.40 down 10 cents, but way off the high, that peak D high of 76.35 that was made the week of the 19th of June. Yes, it's peak C in the monthly, and it should go to a D, but maybe it's going to have to pull back a little bit further. These are the ones I'm keeping my eye on, because at any point, if we get in a really big oversold condition, not like the one that was last Wednesday, to me, that was a fake. That was really, and all the symptoms of how can I put it? It didn't have the true essence of what I look at when I'm looking at the VIX index spiraling higher and the price going spiraling lower, and then you get an intraday reversal that is a major reversal. It had none of those characteristics. It looked more like a ploy, a fake out, and that's exactly what I think it was on the upside. So, so now we can go. J&J had asked me earlier on about, you think I'm going to remember? Now, SLV. So look, here's SLV. Silver had a lousy day yesterday. Look at that. And lousy day today. It's actually up 33 cents. How can it be up 33 cents? Oh, this is today. This is an island reversal. Had a lousy day yesterday, and today it's bouncing back up. So this is going to be very interesting, because when there's a divergence between gold and silver, and just for a couple of days there, silver was looking better than gold, and gold was looking silver, and just kept on swinging around. It was really hard to say which is going to be a leader. All of a sudden, you've got gold, the GLD, is rallying into leg D. But remember, when you're coming off a low, this is where you can say, yeah, it's leg D, but it doesn't necessarily have to have the same consequences as a D when you're going to recovery highs or all-time highs or recent highs. That's kind of different, because you've probably already had one series, a buy mode that went from buy signal to buy mode to a leg or a D, and then a peak D or even an E, and then you pull back. So this to me is the coming off a bottom, and in this case, a major bottom. This particular move could have legs. I haven't said that for a long time. And the reason why I'm saying it is because my gut feeling, and I really don't like to go with gut feelings, but sometimes gut feeling is really what is going on in your mind, and it's just it's a matter of extrapolating that information into a verbal consequence, which says that there's a chance that gold is being perceived right now as possibly a currency of fear. And that's when I like to trade it. That's when you get your biggest moves. That's when you can suddenly see something that was down in the single digits moving sharply up 50%, 80%. So I'm looking at it and I'm saying, is this going to happen now? We'll know a lot more after the Fed speak this afternoon. Question about a Z. Is that a ZSL? What the heck is a ZSL? ProShares Ultra Short Silver. Double short silver. Yeah, you know, I'm not looking at the short side in gold or silver at all. So I would rather be looking at the SLV and saying, whoops, the SLV, and saying, I don't remember, what is the double of the SLV? Someone in the den, maybe you can tell me. Yeah, I'd rather be looking at this, and it's in a leg, it went to a leg F. That's the reason why I was not surprised about the pullback. I am a little surprised about the gap up. There's an island reversal here, and I couldn't even put it down. This is the strangest thing. I really have to put a down arrow, because it is a peak F, it has all the attributes, but the MACD fast-moving average did not even budge. The stochastic went to 65%. This could be a brand new buy signal if, in fact, the SLV takes out 1492. And that's the reason why I wanted to go to the long side in the metals. In this case, it was actually gold, only because I'm looking at it and I'm saying, you've held up well. You aren't showing strength as of this moment, but some of the gold stocks are showing a lot more strength. All of a sudden today, you are getting some strength in the GLD. Look, the GLD is in leg D, but what it's done is the gap low of the 17th of July of 108.40 is being tested. We're at 108.27, the high so far. And when I do my left side, right side price time match in this particular instance, right here to there, it's kind of done it in a shorter period of time. Has it? Let me just check. Make that green. Right there. And that's the entire gap. Wow. It did go towards the top in a left side, right side price time match. Then it extended to the right. And all that's saying is you've got to now choose another midpoint, because the I would have to take that from the bottom at 823. Did I say, well, I mean 108.40? Yeah, 108.40. That's the level that we're looking at. And if we pierce it in a longer time frame, and having held the 9-period moving average, and with the stochastic at 80% and the MACD still good, it's suggesting that you've got to look at the next time frame. In this case, it's the GLD weekly. The GLD weekly failed to break under the 109.60s key support and snap back. Instead, it went all the way to 103.43. Let me type that in. And now it's starting another move, and that means I have to look at shorter time frames. I have to also look at the technicals, because if there's a buy signal that goes to a buy mode, and that's kind of almost the case now in the, it is the case in the daily, it's suggesting that higher prices are to come and that you've got really good support in the 106s now. So with that in mind, I'm looking at the weekly chart and I'm saying 9-period moving average of 108.10, and it's at 108.18 right now. Stochastic's improving. It's not great, but it's gone from the single digit, it's gone from about 12%. Let me tell you what it is. In the weekly chart, this what am I looking at? Stochastic. The stochastic is, am I going to be able to do this now? There it is. 10. It went to 10. It didn't go to single digit, but it did go to 10.5. And it's at 15. That's a 50% rally. So I'm looking at this and I'm suggesting that the histogram's improving in the MACD, but you're going to have to wait for either time or price over 108.50. But if it goes to 109, at that point, I think the MACD gets real close to crossing positive. We'll see. We'll watch it closely. So that's why I think the downside in the short term is very limited in gold, and I think the upside has potential. So I'm kind of positive, and I have been over the last week on gold itself. I'll be back. Basil Chapman, Taika Conditions Hour. Dow's down 220. S&P's down 25. Whoa, just got another sell, 230 and 26. I'll be right back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi folks, Basil Chapman. We are back, and the Dow's down 215, S&P's down 24, and yep, Daryl Martin coming up. Great shows right through the day, and I want to just discuss for a brief moment here, maybe I'll get into it more on Friday, the Chapman Wave unconventional flat-based restart in the dollar. What it says is that low bar of the 10th of July of 75.45 is in fact a target area in time. Now, we've used up the left side to the right side, which comes in today. That says that we're going to have to move a little bit to the right, but it's also saying that there's a chance that if the dollar, instead of going to the 90, as I said earlier in the show, instead of going to the 97.30s, starts to pull back and goes to 96.50 or lower, then what you'll get is another arch formation, and that's going to suggest quite strongly that you will break, not you, the dollar will break its low of 95.93 that was made on the 12th of August over a period of 2 weeks or 3 weeks or 4 weeks or so, going into September, and that we will test 95.50 to 95.30. This particular pattern says there's a chance that you will break the 95.45 low of the 10th of July. And very soon after that, you could suddenly see a spike to the upside, but we'll see, we haven't even turned down yet. So we have to see exactly what happens. That's what the Chapman wave unconventional flat-based restart suggests. But I also want to look at some other things. I spoke about the hotel and basically the packages that are given. There's just a whole lot of things going on in terms of the vacation, the rentals, the accommodation in that area. I showed the charts of Hyatt, Hilton, Marriott, and so on. They're just not good-looking charts. But most importantly, through this 8-month period, we've seen the rotation go from really strong sectors starting to break down and then breaking down, or just about to break down, as we see the XLVs on the edge. It hasn't done it yet, but it's on the edge. And with the autos, the auto parts, that area, that's just starting it. There might still be some flurries to the upside, but I want to get my toes wet to see, because that's how we do the timing in the Chapman wave for big reversals. So we're testing the waters there. But if you look at the SMHs, I mean, this is unbelievable. Look, look at that breakdown there. Another breakdown today, 49.43. And we've been short actually via the via the SOXS, 300% short. That means it's already made up of a short. You just buy it as if it was a long. And when if that particular instrument starts to see, in this case, the core, the SMHs start to break down, that thing goes up. So in this particular instance, from the 57 area, it's down to 49. That's big. So that makes the stocks, I wouldn't be surprised. Yeah, I think we've got about a 50% gain in this particular instrument right now, the SOX. And now it's in E, or is it recycled? I mean, this is really serious stuff. Why? Because the semis are like like copper. It's telling us about world economies. It's telling us about telling us about lack of buying pressure all around the world. And yes, computers and the chips are commodities, but wait a minute. They might be commodities, but they still tell us about product cycles, etc. And this is saying the monthly chart says, sell signal already at the end of this month. It could go immediately from a sell signal to a sell mode. The monthly chart is already in a sell mode. It's already down the left side, right side, price, time edge. Wow, that is really something. So as we're about to wrap up, and I'll be back tomorrow. Check out my opening call. We're still putting in new positions. So this is very interesting because the Dow, the resistance now, it's that 200 period, the 9-period moving average of 17,462, but we're into the wick of that candle of last Wednesday. And if we start to, the Dow starts to trade at 17,260 for more than 3 to 4 hours, watch out. We'll be going down to the 17,125. A bounce today has to start immediately and get you to Dow, not minus 200 at the close, but minus 110, minus 85, something better than what it is now. So watch out. Just be real careful. I'll be back tomorrow. Have a wonderful day. Check out my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.